Exit strategy, one of the biggest buzzwords utilized in property purchases today, but yet one of the harder concepts to grasp, one that's filled with guesswork and a good amount of sales talk. But that ends today. So I've utilized the last month as well as my 9 years of experience to develop a framework that's backed by data and research in hopes that it provides all of us with greater clarity on our exit strategies. You ready? Let's go. The broad definition for exit strategy is this. What and how does it look like when you sell this property that you're going to buy? Well, I'm happy that most buyers today are keeping an eye out on the eventual exit whenever they purchase a property. The inherent problem with exit strategy is this. Number one, it's way too general a term, and that results in a lot of guesswork and a lot of blind faith, and it ends up sounding a lot like, oh, I just sell to HDB upgraders, sell to first-time buyers, small families, and the worst one is sell to foreigners. And the second problem is that there's no real way of comparing the exit strategies of two different developments or between two different areas. Here are some of the questions that people ask when it comes to exit strategy planning. Is there demand in this area? Who am I going to sell to in the future? Is there too much competition in this area? Will I have trouble selling in the future? How long would it take to sell? How much can I make from this purchase? Am I buying too high? Which development has the better exit strategy? So I've figured a way to answer all these questions utilizing data. Now that will remove all the hearsay and guesswork involved in developing your exit strategy, right? It's all factual, transparent, and there's no cherry picking of data. And I hope, at least I'm going to try, to make it easy to understand. And before we come to that, I have to make some important disclaimers. Number one, this is not perfect. It's still a work in progress, but it has already been utilized on the ground for our clients to assist them in making a decision on which project has the best exit strategy for them. So I thought it'll be useful to just present it as it is to the audiences in hopes that it'll offer you guys some perspective, especially for those who are struggling to decide on which project has the best exit strategy for them. So I invite comments and feedback so that we can all make this better together. Number two, do not use the score on an individual basis, right? It's still too early for us to determine if one score is good or not, right? It's going to take time for us to create a critical mass of data to be able to tell if a score is good or not. But in these early days, utilize this framework as sort of a basis of comparison to tell you which out of 4 projects has the best exit strategy, has the best score, comparing them on an apple-to-apple basis, which is what we are going to do. We're going to create an entire series whereby we'll continuously rank and score different projects, different unit types, and we're going to put them all together into a centralized ranking system. So if you are interested to take a look at this framework as well as this centralized ranking system, so every time we score a new project, we're going to put it in, we're going to send out the new ranking to all of you. And if you're interested in that, click on the link below, just key in your email, your contact number, and we'll update you every time we have a new score, a new rank, or a new way, an additional parameter that we'll be inserting into the framework. And of course, don't forget to like and subscribe so that you'll be updated every time we score and rank a new project. So I'm going to break down all these questions and share with you what data point can we use to answer all of them. And the first question is there demand in this area? So how do we analyze the demand for a particular area? You take a look at the byproduct of demand. And the byproduct of demand are transactions. And how do we analyze how good demand is for a particular area? Now that is where we look at how many profitable transactions are there and how profitable transactions are in that particular area. To allow us to compare between larger and smaller units, people that hold for a longer time versus people that hold for a shorter time, we utilize this parameter called percentage annualized gains. And I'm going to put the formula on how you calculate percentage annualized gains over here. Quite simply, if an area doesn't have sufficient demand, units naturally take a longer time to sell, and sellers will then have to cut back on their profits or maybe even take a loss to sell their units. Case in points, the units that we see over in the CBD or units that we see in Sentosa Cove. It's just apparent that there's no organic, no local demand for those areas. Conversely, areas with high demand such as condos within 1 km of the most popular primary schools where demand outstrips supply, sellers can ask for higher and higher prices, naturally earning them good profits. So this is the first data point in our evaluation matrix, average profitability. So I'm going to use the hill at 1 North, right? We have recently assisted one of our clients to analyze this particular development, and we are utilizing 3 bedders at the hill at 1 North. Yeah, the unit size is 980 square feet, the price is about 2.5 million, and this is the PSF, right? The entire area, 3 bedders in the whole area, have an average profitability of about 3.2% annualized per annum. How do we get this number? We take a look over here. We go to each development, like for example Heritage View over here, 4.9%. So there were 14 3-bedder transactions in the last 1 year. We take transactions in the past year, and they average out to about 4.9% per annum, right? We have over here Dover Park View as well. One interesting thing to note here is that the older developments in that area actually do better, despite the fact that they're actually 99-year leasehold. You can see over here Heritage View is already 24 years old. Dover Park View is 27 years old. Whenever I see developments above the age of 20 years lease and still being extremely profitable, that tells me that that particular area has strong demand. This is another way you can utilize profitability data to sort of analyze the demand in a particular area. And we have sort of the black sheep over there, the one that's pulling down the average, with Rochester Residences at only 0.7% annualized. There were 4 transactions and averaged out to 0.7%. I believe it's because some of them were actually loss making, and so that they averaged out to very low 0.7%, right? I get asked a lot, right, whether or not why Rochester Residences don't do well, and I primarily boil it down to the fact that number one, they entered before the cooling measures. A lot of people, they bought it up pretty high before the cooling measures, and then prices never really caught up. Second, if you really go and look at the layouts, they are fantastic. Third, their sizes are way too big. 3,000, 1,600 square feet, way too big in terms of the quantum, right? So the PSFs wise, even though the PSFs are quite reasonable at that kind of quantum, it was very hard for people to accept, and as well as the layouts weren't that fantastic as well, right? So that's our very first data point, average profitability within that area. Question number 2, who am I going to sell to in the future? I used to think this was a very good question to ask, and I would trigger my clients to ask me this question and think about it together. And the kind of answers I give tend to be upgraders, young families looking to move within 1 km of a good school, young couples. And after a while, I realized the answers to all the developments seem to be very similar. Then that begs the question, how do you compare between one development and another development? And that got me thinking, now why are buyers asking this question? It's because at the end of the day, they want to know how easy will their unit sell in the future and how long will it take to sell. The problem is, there's no real way of tracking how long units take to sell or how long units remain on the market for in Singapore, because our main portal for selling properties, Property Guru being the bloodsuckers that they are, require us agents to constantly refresh our listings to have maximum exposure. And then, so the number that you see on the bottom right of the Property Guru listing isn't reflective of how long that unit actually is on the market for. It's just how long ago the agent pressed refresh. So since we don't have that, I've come up with what I like to call the supply ratio. Quite simply, it's taking the units that are currently for sale in the vicinity divided by the units that are built within the vicinity. And so you are looking for as low a ratio as possible. So the reason why I created this supply ratio, because I found that a lot of buyers create a perception of the supply in a particular area based on what they see. For example, they go down for viewing and then they take a look around. They find that, wow, this area got a lot of condos, and they naturally have the assumption that the area is oversupplied. The units in that area next time will take a long time to sell. But what they don't see is how many units are actually for sale in a particular area. Some areas can have a lot of condos, but actually not a lot of units for sale. Those of you looking for 3 and 4 bedders in the resale market right now will know what I mean. So there's more that meets the eye. You got to utilize this ratio to have an actual sense of the supply in the particular area. And based on my experience, generally a lower supply ratio would mean units in that area can sell quicker. So let's come back to our evaluation criteria. We have added in the 3 new rows, right, with the current units for sale, the total supply of units, as well as the resulting supply ratio. That's just the current units for sale divided by the total supply in that area. So first one, the current units for sale. We just have to take a look at Property Guru in and around that area, how many 3 bedders for sale. So here you set 3 bedders. Okay, so remember to, of course, remove any potential new launch listings in that area, and I do that by just going to the build year and setting it to be earlier than this particular year. Then that should eliminate all the new launch listings. Of course, sometimes you can't, there are duplicates, yeah, but I think it's not too bad. Usually I just leave them inside. So here you can see all the different 3-bedder listings in the area. It's also good for you to go in and see. You can see what are the current asking prices as opposed to the current entry prices, right, that you'll be paying. So here we have 23, right, and then the total number of 3-bedders built or are currently being built is 1,082. So this one we just total all of them up together and you get 1082, right? You got to include the new development that is within consideration as well. And so you take them 2 divided by each other, you get 2.1%. Yes, I know, some of you might be saying, what if it's because there's no demand in that area? Nobody want to buy, that's why nobody want to sell. This is why in the next data point, we are merging the demand data point, which is the percentage annualized gains, and the supply ratio, and I term this the exit score. And with the exit score, we're going to be able to answer the questions. Is there too much competition in that area? Will I have trouble selling in the future? And how long will it take to sell? Generally, you are looking for as low a percentage as possible. So coming back to our case study, in order for us to find out our exit score, what we do is going to take the supply ratio divided by the profitability. And so for 3-bedder, at this price in the hill at 1 North is going to score at 66%. Now, is this good or bad? Again, I wouldn't know, we wouldn't know. We're going to know only when we have more case studies coming up and then we compare them across the board with one another. Next up, we're going to answer questions. Am I overpaying and how much can I make from this purchase? So I'm going to utilize PSF and quantum gaps to answer these questions. Now, why do I look at quantums? It's because it's what buyers come to us with. Right? They don't come to us with like,
Alvin, I have a 1,500 PSF budget.
They don't, right? They come to us with like, hey, Alvin, I have $1.5 million budget and I need 3 bedrooms minimally, right? It is what they can actually afford. But traditionally, PSF have been utilized to determine if you are entering at a fair price or if you are getting a good deal or not. But the problem with evaluating your entry based on PSF is that there are value traps that is designed to capture people utilizing PSF, right? We have case in point, right? Penthouses, we have boutique developments, and more recently, if you know what I mean. And I've seen many cases of buyers getting cold feet, not daring to make that entry because of the PSF of a particular development. They are just scared off by it. And then they end up missing out on a good deal and missing out on good investments. We've seen this many times where buyers in 2018, they take a look at some of the developments in Park Esta, in Riverfront Residences, in Jadescape, and they said that PSF is way too high. In the end, they missed out on an excellent investment opportunity. And this is going to become more pronounced with GFA harmonization and minimum average unit size rules, which is why I'm merging quantums and PSF together to give you one score to try and help you cross that PSF barrier. Now, coming back to our case study, as mentioned, we'll be looking at both quantums and PSFs, right? And for all of these data points, we are using 3 different types of that data: the average, median, and highest, right? Sad to say, sometimes agent may just use the highest data, right? The highest PSF, highest quantum, and try to sell you that's how much profit you're going to make, right? So we're not going to do that. We want to give you a holistic idea on the exit strategy on your particular entry price to the place, right? So how do we get average surrounding quantums? Take for example, right, Blossoms by the Park, the average 3 bidder transacted in the last 12 months is 2.4 million. So we see this number over here, and so we just, for this, right, we're going to average that number right down over here. And so for the highest, you can see this one comes from over here, which is the highest one that we've gotten in that area, and then the median ones, right? So then this is the actual quantum gap that you're going to see. So it will be good if you get all negative numbers, and that will be very clear that that's that gap that you can potentially feel. But it's going to be very rare for you to get negative all across the board. Yeah, but so this gives you a good idea, and we have it down into percentages, and the total up for all of them is just summing them, all of them up. Again, the best is as low as number as possible, even better if it's negative. Now we look at surrounding PSFs, right? Basically similar to what I mentioned earlier. Then we have that PSF gap. Again, very rare for you to get negative, but if you get negative, it's good. Again, now that I'm talking about these points, right? Why I'm trying to make so many different data points, because if you just look at one, for example, the PSS, right, and you notice the PSF is very negative, and you find that that's a good deal, that's where you fall into value traps like I have mentioned earlier. It has to be a little bit more holistic, and you look at it all across the board, especially important to have all these supply ratios inside. And so over here, we get a total of about 70%, and when we mash these two together, basically summing up these two numbers, we get 74%. Again, we don't know whether this is good or bad. That result will only come out once we start comparing more and more developments. So on that note, right, the next development we're going to have is the much anticipated Chuan Park, and we're going to look at 3 bidders at Chuan Park. Put down into the comments, what do you think we should review after Chuan Park? Right, so the most commented one, we're going to review them. So I hope that by creating an evaluation criteria that is holistic but not overly complicated, that just confuse the hell out of you, that covers sufficient bases, and to also allow you to cross that barrier, that PSF fear barrier, because I mean, across the board, be it you buy new launch or resale in today's market, you're going to be paying high PSF, right? But which development is more worth the while for you to pay that high PSF? Because at the end of the day, if you want to buy an area that's fundamentally sound within 1 km of a good primary school, for example, right, it's a given that you have to pay a high PSF. Right, so hopefully with this, it gives you a little bit more confidence and a little bit more clarity to move forward. So finally, the last question: which development has the better exit strategy? So you can perform this on your own, right? Just put the different developments that you wish to compare side by side, and then just list them down, and of course then you can finally compare their exit scores with one another. Again, I like to emphasize that scores on its own like that don't mean for anything, because I can't give you a definitive answer on what's a good percentage and what is not a good percentage, right? Maybe in the next couple of years, as we go on this journey together and rank up more and more developments, we together can come up with a score, right? A passing rate or a failure rate together, right? So please, right, put down into the comments which developments you wish us to rate, and ideally we're gonna fill this whole shit up as we go through the years, right? So for today, because we only have one, the hill at 1 North, 3 Beta is going to rank number 1, right? We're going to rank hopefully all the developments side by side, right? The next episode is going to be Trump Park 3 Beta. Let's see if it's going to score higher or lower than the hill at 1 North. So this framework is designed to help you select between developments, which development has the better exit strategy compared to another development. But of course, what is the best for your portfolio and for your purchase? There's much more factors to be considered, right? Things like number one, right? If you wish, you could also compare the size of the development, whether or not there's transformation in that area, if there's new plots. This is something that I haven't yet plugged inside because I didn't want to make the base framework to be overly complicated, right? There's some very complicated frameworks out there. I just want to make it simple to understand, simple to use, right? But of course, there's other ones that you can potentially add in if you want to make your evaluation a little bit more complicated. Perhaps my suggestion is that you can include some of these as like outside peripheral considerations, okay? Right. Another one is rental yield, especially for investors. It's good to put inside, right? If we want to do rental yield, the 1 North area definitely come out on top. Right. So for those of you, so this one is a very logical numbers evaluation, right? It excludes like own stay factors. Some of you may need for schools, some of you may need for MRTs, for amenities. So that's something that you can put inside again. So then you can place it side by side, right? And you can see as you go. Next up, there's not included over here. This is where I know if you are kind of overwhelmed by this whole thing and you feel you need help to do this, right? And also if you have questions about portfolio optimization, so this is additional factors that we put in for our paid clients, our personal clients, right? Holding period. Yeah, which one requires probably a longer holding period. So case in point, right? Normally, if you have a higher gap score, it tends to mean that you need to factor for a longer holding period, right? Is this the optimized portfolio sizing based on, you know, where you are in your life, your age, your earning power? What's the opportunity cost of going to something like that? Opportunity cost of going to resale, for example, if you are looking for an investment, looking for resale, for rental, right? What are some of the opportunity costs involved for that? If you are buying a new launch, what are some of the opportunity costs involved for that, right? As well as the exit timing. Which one has a particular exit timing? You're going to have to layer this with potential new plots coming up if there's new MRTs coming up, right? So these are real deep level stuff. Let's say you have boiled down 5 developments and narrowed down into 2, right? To finally decide which one is the 2. These are deeper level stuff that we want to consider together, right? Then of course, once you finally select that particular development, we have competitor analysis, layouts analysis, stacks analysis, as well as PSF gaps within the development, right? Because currently we are just checking PSFs within the area. But let's say you're going to the new launches, or you're going to even a resale, you want to compare units to unit, right? Which one has a PSF gap? So which one is a more worthwhile unit to purchase, right? So all of this is where we can come in to assist you if you feel that you need help on this basis. If you want to just see some of the other evaluations that we already have beforehand, drop us a text. Click on the link below. We'll be happy to send this to you, the framework itself to you. Or you can also click on the link below to join the mailing list where we'll be updating you guys whenever we have new rankings that are out. Okay? If not, please, if you found this video useful, don't forget to like and subscribe as you help out the channel a ton. And also make sure you subscribe if you want to see the scoring moving forward. Yeah, put down into the comments what are the other developments you wish for us to rank. If not, I'll see you next time. Bye bye.